Hi guys, if you see today, the S&P 500 has been like there is a down in S&P 500 0.087%, where 5867 is the like in 5 days. If you see, it started with 6041 and then it goes to around 5867. So there is a 3.34% down, and in 1 month, if you see the S&P has not given any return in a one month also. There is just 8.85 is nothing return in so far, where a month return is 7%, where the YTD 23 and a 1 year return is 24. So how gonna things look like? If you see, like again, there is a news that next year Fed is going to decrease the interest rate, and there's a cut in the interest rate, and I think that is one of the major reasons market is going to draw from here, and due to the interest rate. So majority of the even you know that market is all time high, and though it is given a very good return. If you see here, the return it's really good. And if you see the next, like what is happening currently, if you see here that the market, if you see here that the VIX is also like down, goes up to 24, and S&P future is down by 0.23. So it indicating that there will be more fall in the coming session again in S&P 500, where the last session was like little bit there is point zero 0.09 and all like, but earlier it was up. The S&P was open up, and but later on, if you see, it's been like it's going down. So S&P opened with around the high was like 2,900 around, and it goes down. So the next session is going to be a negative sentiment of a 0.5%. Where again, if you see what are the companies are most attractive, if you see Nvidia, Tesla, and micro technology, Ford, and top winners are these Accenture and all are top winners, United Airlines. Where rest of the majority of the are in a negative sentiment. Where if you see real estate, material, energy, and these are all negative. And communication, healthcare, even though healthcare is not doing well, it's been one like this year in the US market. If ITD, I'm just talking about, there's going to be end. So, well, first I'm going to show you these financial sectors are going up, going is a positive, and IT was positive. But YTD, these are the sectors are not given any kind of return. So next year in 2025, make sure you keep track on this. These are the sectors. Keep eyes on these sectors. And YTD also, if you see energy and material, even I can say that real estate and healthcare just are giving 1.43% return. So hardly I can say that, but there is a negative return altogether. So when last session was like utility, financial services, which other companies are in a positive trend. Like JP Morgan, if you see, it's in a positive 1 point, and Bank of America, if you see, is it's in a negative. So the trend was even not negative 0.38 is the Berkshire Hathaway. So rest if you skip, but now we're talking about the valuations part. If you see this is a buffer indicator, and it is currently at the 200. So what we call it as total market cap to GDP, and US market cap to GDP. If you see last 1 year, it is all time high, and it is like from 207, it's been getting corrected now. And the if you ask me the valuation part, which is the best valuation we can do, so the valuation part is 150. So currently the market is like around in 200. So for a total market, and this is a Buffett indicator, like Warren Buffett, they used to sell that it has been made by the Warren Buffett. So in 5 years, also, if you talk about the US market is all time high. Earlier it was like 199 was in 2021, and the market then there was a correction in the market, and it is been to 142. Now again, it is all time high in 5 years. Also, we see when in all time high also, like in 5 years it's all time high. Like if you talk about 10 years now, it's all time high. The market is already all time high. So there could be a big correction coming up in the market. More than 15-20% could be a correction in the market. So nobody can predict the market, but the indicating it is all indicating that there could be a correction in the market. If you see that it is currently at here it is 200. So that is what I can say, that this is 200, and if you say this is a bottom, and again this is all time high here. So it is moreover indicating that the market could be there could be a fall in the market. So make sure you You be very, like whatever you are buying, you should book your profit in the US market. If you see the valuation of the P ratios or what you can understand about the P ratios of US, I mean, just it is a P ratio of 10 years. If you see the 10 years P ratio, so if you see from here, this is like 28, this is 24, and this is the bottom is 20. So 20 might be, I'm saying 20 could not be possible currently. But from here, if you see from here, this is 2021, and it was like all-time high was 38. And there the market got, the P ratio got corrected. The market was undervalued here. And I just show you one thing, it's W. If you see, this is W. When there is a W, W is currently, like the market is going to cross from here and going to make new highs. So currently, it is again, it is in 31. And if I see the moving average, so currently the market, if I see YTD, if you see the YTD, so YTD is like currently at 30, and it is already crossed its 50 days moving average and is about to able to touch its again, it is been like from here again is going up. So whenever there is a correction in the market, like earlier if you see there was a 21, they got corrected at 29. Earlier it was in 29, and it got corrected again in 29 itself. Again there was the market up. Again the market has crossed its 50 days moving average. But for a long term prospect of investment, if you ask me, well, if you see this here, if you see here, it is for the long-term investment, and this is was one of the very area where it is the right time for the investment. This was 26. So 26, if you see here, it is 26. So 26 was like 1 year. 26, there were two bottom where the market was undervalued, and that all I can say. And in 3 years also, if you see the market in 3 years also, the market was one time is was in 2024 and 8 months. The correction in the market again here there is a correction, and in here if you see it was in 22, like in 2023 from all time high to 25 to even 23. So this is the market, like market is coming from here, it's intersecting everything going up all the way to up from like in 3 years the motor it started with 19 P ratio, currently as is 30 P ratio. If you see the trend line of 10 years, if you see the trend line of 10 years, earlier it was 40. After COVID, when I just show you like here, when the P was around 25, the market got hit by the COVID, and the P it goes down to around 18, and again from 18 it rose up to 35, 40 around, and there was a correction again, and this was the right time to, if you're looking for a long-term prospect of investment, look for the P ratio around 19, but it definitely not going to come. Not all the times you come here. It's some in a year. Like in if you check out in 10 years, one, two, three times it happened. In 5 years, if you see, it happened twice. I can say if you consider this also thrice. So in 3 years, if you see when there is the lowest P, so it was one, two, and I can say that 323. So just wait for the like, and this again there is a bottom of 26. So again the market, the right thing for your long term investment could be 20 below 25, or 23 could be a good time for the long term prospect. So currently market is very high valuations, and and again it is going down. If you see, it was from 30 to it had been decreased. Well, and that is for the P ratios. And if you see again for the last 30 years, I'm just showing for last 30 years, if you see the P, it's like it started with here, and then in 2002 there was a bubble like on the market, and then 40 from 45 they crashed to the P was undervalued to 16, and the market was crashed around 52, 55%. There was a crash in the market. Again, in if you see here in 2009, there was a crash. Again, the market go back to 14 with 120p. So it never happened. Like if you in 20 years, if you talk about in 20 years, it's a one, two, three times it happened, and it happened in 2020. December, like market, it was the P was here, the market got crashed. It was in the bottom of 18. Then if you started investing here, whenever you want to invest for a long term, look for a P where the valuation is very low. So you need to read the chart to able to understand that. If you see the technical of the what's going to happen here, like currently, so technically you can see that VIX is coming down. Okay, but the truth I'm going to show you in 5 days, the VIX is going up. VIX was here in 27 and it's going down. And earlier it was in 15, it rose to 20. it rose to around here. It is 20, and then it's coming back here to again is going up. If you see, if you open the 5 1 year, you cannot able to determine that it as per here the technicals it is showing that market is going to be up because it is going down the VIX. But in 5 days trend line, if you see the VIX is again is going back to up. So it indicating that market again going to be in a downtrend. So if you see see the technical of the market. So if you see the technically the this three line, you can see that one is 50 days, one is 100 days, and one is 200 days moving average. So currently it is going in a downtrend in VIX. The VIX was the RSI was currently at 64. It goes down. So I expecting. I mean, my expectation is that there could be a more fall in the market. 1.97% market will be currently will be trading around 5,743, and then if the trend line goes again down to it, market could be at 5520, 5,500. So there could be a correction in the market around till 5.7%, around 6%. So let's see. For my prospect, there could be a correction coming up in the market. So that's all for now. And if you're investing here, I would be saying that you should be, in US market, like it is a bubbles. Like the P ratio is very high, is market capital GDP is very high. So they're looking for a correction. So if you want to make a long term investment in the US market, I would be saying that you should be little bit be, you should be waiting for that. Okay, it's not a really a right time for your long term investment. For the short term investment, if you think some valuation is good, and so for short term it's fine. But currently, US market looking for 15-20% bearish market in US, and because once next year the Fed is going to do the correction in the interest rate, definitely then they will be you will see a correction in the US market. So that's for now. Thank you so much for your time. Thank you for watching the channel. Thank you for subscribing. Thank you so much.